Welcome back to the ETF Inspector. It's Friday, October 17th, 4:30 in the afternoon, and this is our daily recap video for our 4 weekly paying Roundhill funds. The first 3 are 0DTE covered call strategies on the indexes: QDTE for the NASDAQ, XDTE for the S&P, and RDTE for the Russell 2000. The last is a Bitcoin covered call strategy fund, YBTC, which makes a synthetic position in IBIT and then sells weekly calls off of them. A reminder, I'm on X at ETF_Inspector1. I post all things related to all the different ETFs I talk about, as well as for this video series, I let you know the 0-day trades, but that's not that important anymore because yesterday I did announce that I'm going to be stopping this series. So today's going to be the last video for these. They just didn't really take off, not really catching on. There's a lot of money in these funds, so I'm just assuming that people that put their money in it kind of set it and forget it and aren't interested in the daily workings of it. So I'm looking to switch over to something where people are more interested in how the funds perform on a daily basis. But we will finish out the week. So we'll start off by taking a look at how markets performed today. After yesterday's bloodbath, it was looking like things were going to start bad again. As you can see, starting well below the previous day's close. It looked like it was going to be another ugly day, and then somehow ended up nice and positive for the NDX, up 0.65%. QDTE not able to keep up, only going up about 0.5%. SPX up 0.53%. XDTE just barely outperforming, going up 0.56%. The Russell 2000 was down 0.6, and for some reason, the RDTE was down 1%. That doesn't make a whole lot of sense. And then finally, YBTC is based off of IBIT. IBIT was down 1.56%. YBTC down even worse, almost 2%. So next, let's take a look at the trades within the fund. So it makes sense why QDTE was not able to keep up with its underlying, because today they sold 382 calls on the NDX with a strike of 24,710, collecting $65.19. So this is by far the largest premium we've seen them go after. Almost $2.5 million collected at the start of the day. Unfortunately, the day turned around on them and ended $107, almost $108 above that strike price, costing $4.1 million to close out for an overall $1.6 million loss on the day. So they were in the positive yesterday, and then dropped back into the negative for the week at the end of this trade. So lost money this week. But as far as making the guesstimate, you look at the previous week's performance, and that is a loss of money as well. So when we switch over here to the holdings page, first we check out there's no changes in our underlyings. We have deep in the money calls dated anywhere from this December to next December. So that everything stayed the same from yesterday. But when we look at the income from last week, it's negative, so that doesn't help us with our guesstimate. The main goal is to generate enough income in options trading each week to pay out the distribution. But when that doesn't work, then we've got to come up with different ways to make a guess. Our average over the last month is 20.4793 cents. This last one that we actually received today, 20.423 cents per share, was a roughly 30% annual yield. And my guess is that it's just going to slightly drop from there. Let's see if I want to revise that based off of QDTE's performance over the week. So realistically, it probably will stay right at that 20.4 cent per share distribution. But if I miss it by 1/10 of a cent, it's no big deal. Next declaration day is next Wednesday, the 22nd. That's now 5 days away. There's $928 million in assets under management, 26,730,000 outstanding shares, and the NAV at the start of the day, 34.73 before things moved up, increasing the share price to 34.98. So everything after today's increase will go up slightly in value, and that's why QDTE went up. But because they lost money on the trades, that's why they weren't able to go up as much as their underlying. Next, we'll take a look at XDTE. They sold 562 calls on the SPX with a strike of 6,650. They collected $16.98 per share and $954,000. Unfortunately, SPX ended $14.01 beyond that sold strike price, so that cost $787,000 to close out. Luckily for them, they collected more than that, so overall it was a profitable day. They made $166,000 profit, just under breaking even. Still closed the week $46,000 in the negative. Very similar to last week, where they ended about $61,000 in the negative. That's what the week we would look to for the estimate. So again, income doesn't help there. We switch over next to the average, and it's about 19.1 cents per share over the past month. Friday today, we just received 21.2182 cents. That was declared this past Wednesday, the 15th. That's a roughly 25% annual yield. And my guess, let's see if I want to adjust this one. I said 20.5 cents for next week's. Yeah. I mean, they might still stick with 21, but it's probably between 20 and a half and 21. So I'll leave it alone again. Half a penny. I don't mind if I miss it by that. No changes in the holdings. $371 million in assets under management. If you remember the last video or two, we were saying numbers weren't making sense. There's got to be a large change in outstanding shares. They finally reported that 580,000 share drop, so people selling out of the fund, bringing the outstanding shares down to 8,605,000, making things make a lot more sense now. NAV at 43.13 at the start of the day. Underlying went up. XDTE went up with it. So here's what makes sense. Everything that they're holding increased by the amount of the S&P moving up, and then they did make a little bit of money. They had to give up most of it, right? They brought in $16.98 but had to pay back out $14.01 per share. So they did make a little bit more. That's why they increased just a little bit more than their underlying. So we'll see next week on Wednesday if it's what the payment's going to be. We're guessing somewhere in that 20.5 to 21 cent range. Finally, the third of the zero DTEs, Russell 2000 fund, RDTE, sold 706 calls on the Russell 2000 with a strike of 24.75. They collected $6.91 per share. That's a lot more than they normally do, or $487,000. As you can see, the Russell actually was down today, 24.52. That's below the 24.75 strike. It doesn't cost anything to close it out, and they get to keep all that money. Unfortunately, Monday and Tuesday they lost like almost 2.8 million, so they were never able to recover from that, closing the week out at $1.9 million loss. If you look at the previous week to come up with the estimate, again, they lost money the previous week as well, $137,000. So that doesn't help as far as the income portion. So we go to the average, and it's about 25.2594 cents per share, but that is because 2 weeks ago they made a wild payment, 36.6 cents. That was like a 50% annual yield. That was an odd one. It's throwing off the average. I don't think they're going to be paying the average. I made my guess at 22.5 cents, very close to what we all just received today, 22.6984 cents per share. So there was a change in the holdings. They purchased 46 more deep in the money calls on the Russell 2000, dated December 18th of 2026, with a strike price of $204 $46.20. If that seems odd to you and you're an options trader, that's a flex option. We don't have access to those. And when they say deep in the money, that's crazy deep in the money. That's why they go for $2,200 a share. I think I forgot to update that. Let's see. Russell, 24, 52, 17. For some reason, Excel doesn't recognize that stock ticker. And would they go down 0.6? All right, so it doesn't make sense why RDTE would go down worse, though. That's the part that doesn't make any sense. So everything that they're holding should have dropped along with the Russell 2000, but then they kept $487,000 as far as the trading day. So they should have outperformed. It does not make sense why they would underperform. So I don't know what to tell you on that one. Here's another one that's not making sense as far as the numbers. So their outstanding shares are not up to date. As we can see, they say 4,950,000, but if we divide the amount of money that's in the fund by 4,950,000, that comes out to a NAV of 35.29. So obviously a large amount of people bought into the fund because that number is going to have to increase, and then that will cause the NAV to be a lower value, more in line with where RDTE closed. All right, they just paid 22.6984 cents per share. I think I said that already today. Next, we have YBTC. They already paid out theirs yesterday, 38.8861 cents. That was over. It's over 52%, almost 53% now that they dropped again today. YBIT had a very rough week, down to $60.47. They obviously are going to end up winning this trade by a long shot. This expired today at 68, closed at 60. So, it was already valued at less than a penny at the close yesterday. Tomorrow or late tonight, they'll put out the information with the new strike price for next week. My guesstimate for next week's payment is around 39 cents. That's the only way the guesstimate is made is really based off of, I go a little longer on this one. I go 6 weeks, but I realistically think based on the share price dropping that it's actually going to be lower than this most recent. This is just a formula that I have for making the guesstimate. So I think it's going to be below that 38-cent distribution. There's $284 million in assets under management, 7.3 million outstanding shares. NAV at the start of the day, 38.75, before obviously having a rough day with that drop. And again, the synthetic will have lost value once again today, where had practically no value in the long calls in the first place, but the short puts will have ended up costing, roughly $6-ish per share to close out. So they will have rolled this synthetic today, as well as this call. So this call will now be rolled out to next week with the new strike, and then the synthetic will be created, and it'll go usually a month, 2 months, 3 months out. And so it will probably be in this $60, $61 range. All right. And then finally, again, since they're so slow with putting out updated information, it makes it very hard for me to give accurate numbers. But based off of what they've updated their website with, which isn't making sense because the amount of money that they say they have in the download is 317 million, and their outstanding shares, they say 5,730,000. But if you divide them out, that comes out to a NAV of 55.49. But they are trading at 52 and change, 52.66. So we know there's more shares than that. But So then it makes it silly to even give numbers, but it would be like a 91 cent if those numbers were right. Obviously, there's more shares, so that's going to drop this. But we're still thinking 80s to 90 cent distribution. So WPay continues to do well. I'm sure everybody who's holding them is happy. So, all right. Thank you for watching. Have a good weekend, and I'll catch you in the next video.